All right, lecture 10. My journal is a little bit overdue, but here we have my journal. Oh, this just looks beautiful. Can we just take a second? Like, when this is all going to be filled out, we're just going to look back. I'm going to look back on this and be like, man, that's satisfying to see because this actually does take work. And here, this is just my notes. These are my notes. I'm not trying to teach anything. These are just my notes that I've taken. All we're looking for is just which liquidity is taken first, and then we're looking to trade to the liquidity that exists within the market. The algorithm is going to do the work on one end, and then we're going to look for smooth edges on the other end. Jagged edges to smooth edges. Simple as that. Finding the most probable draw on liquidity, probabilities. And I feel like I want to get my mindset more in tune of probabilities. What is more likely, what's more favorable, and then if that just doesn't pan out, then okay, you took a loss. You took maybe you took 5 losses. Okay, if you have a 2-to-1 risk reward, like that's profitable. Like that's simply it. I feel like me when I first started, I had these like huge expectations. I'm like, yo, we need to be doing this and this and this and this, and we need to be having all these. We need to be having everything. We need to be getting everything. No, it's just partials pay 100% of the time. Look for that low hanging fruit. What's more probable? Okay, show up, have a model, have an entry model. 2022 model, inversion and fair value gap are the ones that I lean on and the ones that stand out to me the most. Okay, use that PDRA to get in sync with underlying order flow. Okay, if you somehow get stopped out, then that's okay because the market's gonna be open the next day. And it's gonna be open the next day. It's gonna be open the next day, and it's as simple as that. In all my time looking at the charts, nothing has changed. It's been the same thing every single day, so I'm gonna stick to that. And somehow, if things happen, if things change, then things will change, And then, shit, maybe there's like pigs flying and stuff. I don't know. But basically, went over the lunch hour, the lunch macro from 11:30 to 1:30. We're gonna run on stops. Any liquidity starting at 10 a.m. will be targeted before I run higher if we're talking about a bullish condition. TGIF, I don't really like TGIF, and honestly, in my opinion, I feel like TGIF's more. I feel like it's kind of like cherry picked in my opinion. Like yes, it's a good expectation, but I just in my personal opinion, I don't think the trading model is sufficient on that because I don't know, maybe I haven't back tested it enough, but I feel like so many times it just leads because it has to happen with a narrative and context, of course. But if that narrative and context isn't there, then TGIF isn't even gonna be there at all. So I think focusing on the narrative and context is more important than just TGIF because Friday we've had a classic bye week. Oh, I'm gonna look for TGIF. Yes, it could be something I have in my back of my head, but I feel like coming into Friday, seeing like, oh, we have TGIF. I I just think it leads to false expectations, in my opinion. And then I have a bunch of psychology notes that I'm not really gonna go over, but all good notes. And yeah, uh, we're not gonna go in the charts because it's kind of like a few days after, but we're just gonna go over my notes that I have. Here we had a nice Asia session. This was very beautiful, in my opinion, actually. So we have market opens here. We have a new day opening gap higher. We initially take buy side, and once we take buy side, we respect an order block above that, so we are in a buy program still. So we're in a buy program. We respect that down close candle. Displacement here, pull back, inefficiency that we respect, and then we come up to here. And what I'm doing here is I'm grading this dealing range low to this dealing range high. We come back down into 25%. Whenever you see my annotations, when it's 25 or 75, they're pretty much the same level. So the only different level is the 50%. And look at this. Look at that equilibrium of that. That's beautiful. That's gorgeous. We come back down. We drop lower into this inefficiency right here. We have a stop on right there. Big displacement right there. It's happening between 8 and 9. Then we come back down. Beautiful delivery to volume imbalance. Beautiful delivery to this measuring gap right here, which happens at a 50% of an implied dealing range. And then we have beautiful delivery to that equilibrium price point. And what do? We reclaim this volume imbalance right there. And then we trade up immediately to buy side after finding support at this 75% level and that terminus gap that occurs within that 75% level, that dealing range, or 25% level. and come back, and then we use this level again as support. This is just a beautiful. So you have buy side delivery, then you have a kind of a sell model, and you pretty much just have a buy model here. Very very beautiful. We can see this breaker right there, good support right there to buy side. Very nice delivery there. And then here was 7 a.m. We have this BISI, we have new day opening gap right here. And then we have a previous new day opening gap. We leave relative equal highs. Where are we more likely to reprice to? For me, honestly, I would have liked to have seen manipulation lower below these lows, knock these up, and then trade it higher. But it just wasn't ideal in my opinion. That's why we kind of had slower delivery. But it had we come back down here, taking these and clear these lows up, I think delivery would have been much faster. We're kind of distorting time here on purpose, and then we're trading up into here. Notice how we don't get a body above these highs here, so therefore we still have buy side interest that rests here. We come back down, reprice this inefficiency here, and then we reprice higher to that new day opening gap here. Look at 950 macro creates displacement or a retracement lower to then have expansion higher, and then 1050 macro kind of just consolidates, refers to this inefficiency there. And yes, and then here's our regular trading hours. Sorry about these. We have a gap lower, then we trade above that gap, and then use that low end as support. Look at that order block right there. 930 creates an order block. Boom, gets respected right there, up to buy side. And then we kind of just have buy side delivery for the rest of the day. And here's just some of my macro notes. This is the 950 macro. This is the 5-second short chart showing AMD here. I just want to point out volume imbalance there, BISI right there. This is pretty nice delivery. And then here I have a dealing range. I think that's from buy side to where this starts here. And I see equilibrium and then 75% there. We have mitigation right there. What is this? This is the 1150 lunch macro here. This is 15-second chart. Again, we have displacement lower. So as soon as the macro opens up, we displace lower, create an order block here. We don't actually touch that, but we touch this. It's going to be probably a 1-minute order block. Then we create low resistance liquidity within a macro. We're generating liquidity within a macro. And then we reprice to new day opening gap, which is this yellow box here. Reprice to this higher time frame inefficiency. We take this low here, and then look at that. Beautiful, beautiful delivery right there. We come back down, take this low here, and close all the way back within that range. Then constant encroachment, that wick gets held, and we just see beautiful displacement. Like, honestly, I feel like it's not that hard. It's not that hard. Like, I'm gonna be straight up. What's more probable here? We come back down, we take this low here, and we immediately trade back up in that range. We have a new day opening gap here that's supporting. Look at the bodies. Where are we most likely to go? Probably not lower. We don't have any sell side liquidity that really rests here other than this low, but we have this inefficiency that's blocking that. We're more likely going to trade to these highs here, and also in tune with the higher time frame energy. Where's the energy within the market? Well, we just had displacement from here, so if we know that energy is coming from here, it's more likely to continue in that flow. Lower time frame, I don't know. I think this is the. So ICT actually went over like 350 macro, how it's actually the 345 macro. So I want him to discuss on this 345 macro a little bit more, because in my charts I've always been annotating the 350 macro and I haven't really noticed much of it. But I guess it does make sense how there's 345 macro to 4 p.m. and then from during earnings that it would be 401 to 414. I'm pretty sure. I think that's in a lecture that. I think that's yesterday's. This might have been. I don't know what lecture it is. It's within. It's the next one that I'm about to record, so it'll be in that one. I'm pretty sure. But here, I've been noticing at 3:50 every single day, 3:50 p.m. There's gonna be a liquidity injection. It's gonna be so you see how we're kind of. It's not as clear in this example, but I'm gonna continue to point it out because I feel like this macro right here, from trading from 3:50 onward, this little 10 minutes left in the day, I feel like this is the most spread. Like, I've been backtesting this like for about a month. I have a month of data, and every single day there's some sort of setup. And as you can see here, we have 350. We open up the market, and I don't have it here, but at 350 we're looking. I'm looking for, and I'm gonna backtest this a lot more. Looking for an SMT. We actually form an SMT at the lows here, and then we have smooth edges at the highs. So where are we most likely to drop to? These highs here. While watching this, I wanted price to get to this new day opening gap. So I would think that we would have traded there, but we have SMT and then we have displacement, and then we're just respecting bullish order flow here. And then just look at delivery here. We have constant approach to that wick, beautiful, with this volume imbalance right there. Notice the bodies here. What are they all respecting? Then we see displacement come back down. That's an order block right there. Beautiful respect. Displacement, another imbalance right there. And I don't know what this level is right here. I really don't. I kind of forgot about that. And then more displacement, order block right there, and then we seek buy side. Beautiful delivery within the last 45 minutes. And then here's that daily profile here. We have London high a day, SMT at the high, and then we pull off that high back within the range. Then we come back down into this inefficiency, and then trade back up. So yeah, beautiful day. Like, I don't know, man. Just like getting access to these lower time frames, just proves algorithmic order flow, and just it's very nice to see. And I'm gonna continue to have these charts, and with since I've used these charts, it's actually been eye opening. So, anyways, that's all I really got for this little lecture review. I'll see you all in the next one.